I made over $100,000 in 3 months trading using only fair value gaps. And in today's video, I'm going to be exposing how much I make off my private community versus my trading profits, what you see on the screen. Then I'm going to give you the exact trading strategy that I use every single day to make this type of money. And I show all my bank statements and everything on my Instagram. I show all my trade recaps and all my realized P&Ls in my highlights so that you can actually, follow along my journey as a trader. It is not to flex or do anything like that. It's only simply to encourage those who are looking to start that it is possible, since really I came from nothing and I'm no smarter than you. I really want to focus on educating you on the reality of trading. What can people make from a private community, selling live stream access, mentorships, courses in comparison to trading, and how many people actually have the statements and proof to back it up. And I have not been working for the past 6 months, and this has been my only job. I'm a full-time day trader and I've been relying solely on day trade. So what you're looking at is my page that I sell my private community on. As you can see, my gross revenue for the last 12 months is 5,800. I'm going to go ahead and refresh the page here so you guys can see. Right, there you go. All right, 5,800 and around just under 3,000 page visits. Deduct 5,800 from 103,000, you're left with around $97,000 still in profit that had to come from somewhere. It's not going to come from a 9 to 5. No 9 to 5 pays that. And it can't fall out of my lap. I've been doing this full time. I have no other income stream. I have no other sources of income. Day trading is my income. And the reality is a lot of gurus won't actually show you this. They make more off their private communities than they do in trading. And that's the reality of it, right? But me, I'm pretty sure and I'm pretty confident that I'm always going to be making more in trading. And in today's video, I'm going to be giving you the exact trading strategy, step by step, on how you can start, taking the exact same setups as me every single day so that you can make this type of income. So this is going to be the 5-step process to understanding the strategy completely. Step number 1 is you're going to identify your macro. Step number 2 is going to be waiting for a liquidity sweep and then a CISD, which is a change in the state of delivery. Step number 3 is you're going to wait for an entry confirmation. Step number 4 is we're going to be prioritizing securing profit. Step number 5 is I'm going to show you a simple trade outline that can save you from over trading, having fear, or over risking. For step number 1, we need to identify our macros. So the 2 macros that I like to use, and if I only had to take 1 or 2 trades a day max, then I would only trade these macros. And it's going to be the 9:45 and 10:15 a.m. macro. That is one of my favorites. And then 10:45 to 11:15 a.m. macro. Okay, if I only had to trade 1 hour a day, which I do, I would specifically trade during these macros. These 2 macros and trading in these 2 macros will give me the best probability and possibility to hit a winning trade almost every single day. You're going to find the rare occurrence where you might not have a trade in either session, but you're bound to at least find 1 trade a day, and it's going to be super high probability. Why do we only want to trade during a macro? So the first reason that I only like to trade during a macro is because when we're trading in the section, we're primarily trading with who's in control of the money, who is running the market, who is driving the market, and who is delivering the market. So with a little outside context, we can break down who is actually in control and trade that side of the market when the time comes for our entry. So for step number 2, we need to look for a liquidity sweep and then a change in the state of delivery. But before we can actually do that, we need to build some higher time frame context before we actually enter our macros so that we know which side of the market we're going to be trading, so we can actually really trade with who's in control of the money. So right here, as you can see, we have a bearish fair value gap, right? We have a bearish fair value gap and we come into it, and you can see that we are delivering away from this. So because we have this, these fair value gaps are acting like a resistance level. There is no need to price go higher. So right here, we sweep this high. So this high should now become a protected high. We should not come back up to this level since we are delivering from it, all right? We can scale down on a 5-minute time frame and see what the opening range was able to do. So right here, if I mark out this vertical line is at the 9:30 a.m. So the first 15 minutes was able to push up higher, and we can see that price is delivering out of this 5-minute again. So we have 2 deliveries telling us that price is bearish. Now this should be a protected high as well, because we should not come above this 5-minute gap again. That would be disrespecting this gap and making our trade idea potentially bullish. So we're going to scale down and have a look at what we're going to target. Right, since we're bearish and we want trade on the sell side of the market, I can see we have this very obvious prominent swing low right here. So the next thing I'm going to do is going to hop onto my 1-minute time frame, which is my preferred time frame, 1 minute and 30 second. And then I'm going to just simply wait for price to come up. Now, where do I want price to reverse? Right? And again, it's not more of a want, it's more of a react. All right. So we have these internal highs. I'm going to select the highest one since this is the protected high. I want to see price come up to this high right here. All right. All I'm going to wait for is a sweep. I'm not going to react to anything. I'm just going to wait for a sweep. All right. And right here, you can see we have double stacked fair value gap. So what I'm going to do personally is I'm going to go up a time frame to the 2-minute time frame so I can consolidate those fair value gaps into ones, which makes it a little bit easier to work with. So all I want to see now that we've swept that internal high on the 1 minute is I want to see a closure. We get a closure and that's great. But I do not trade inverse fair value gaps because I believe all these inverse fair value gaps, they do trick you into, taking the wrong setups, and they can be quite confusing. So what I like to do is I like to wait for this and use an inverse fair value gap or a break of structure to actually use as my CISD. So right here, you can see that we did not create a gap, so we could not enter a trade. Now we come back higher and we right here sweep this new internal high that we created right there. So we're able to sweep that high, and on the 2-minute time frame again, even on the 1 minute right here, we have stacked gaps. So on the 2-minute time frame, again consolidating that gap, you can see that we have a singular fair value gap. So all I'm going to wait for is price to close under that. That's giving me my new change in the state of delivery. And all I want to see is a 2-minute fair value gap be created, which we get perfectly right here. So for step number 3, we need to wait for confirmation. Now, confirmation is quite simple, and I'm going to give you 2 easy confirmation tricks to use. Number 1 is when price comes into the fair value gap, all you want to see is no body closure above a 50% level of the fair value gap you're looking to deliver. All right, that's a very bad fair value gap or a very weak fair value gap because we're expecting the next candle to extend a wick. Even though the body may not close in inverse, a wick can do the damage, taking your stop loss out of the picture above this high. So if you get a 50% closure, all right, the next candle is likely to extend past, stopping you out. So then you would want to wait for confirmation. Now, since price came into this level and respected the 50% level quite well, pretty much immediately, as it's starting to pull away from this level, that is when we can jump in real time. You're not going to always want to get a sniper entry off the gap because a lot of the times they may do something like this. We thought this was the correct trade before and we got blown out. Now, right here, you can see that we had obviously more of a reason that this is going to work a bit more than this because we have a fair value gap, but you still want to be on the safer side. You still want to wait for confirmation. So when price is hitting this 50% level and it's starting to pull away with a body pulling away from this in real time, you can enter that trade any point during this area as long as you put your stop loss above this 50% level. Now, this was a really, really good delivery out of this gap. So another one that I like to look for if you're not using that 50% is you can wait for a candle closure away from the zone, either outside, whether it comes into it like this and then closes a little bit outside, or if it does flip and close all the way down there, even closing below previous candle lows, then that is a great entry signal too, and that should be a really, really strong delivery. Okay, so we're going to take our trade based on this right here with a 40-point stop loss. And then we're obviously going to target this low down here. And I could extend it down here, but like I said, I'm not really going to do that. And now that, let's play this trade out. Boom. So for step number 4, I like to say I want to secure profit. And I want to break it down why I want to secure profit a little bit more. Now, the reason I like to secure profit, I really like to focus on base hits rather than targeting home runs all the time like this, is because a lot of the time price may reverse and hit me out break even, hit my stop loss and then continue lower, or it might just hesitate for a really long time. I like to be in and out of the market very, very quickly and very efficiently so that I can be done with the day and go on about my day. I really don't want to be in front of the charts too long, which is why I narrowed my trading down specifically into macro timings. And that's just the simplicity of this model. And you can trade 30 minutes a day if you have a setup in the first macro. You can trade 30 minutes a day if you have a setup only in the second macro, or you can trade an hour a day if you want to place multiple trades if you have a setup in each of the macro that I showed you. But again, focus on small base hits. A 1 to 4 right here was probably a little bit too much for me. Even that's one of my biggest risk to reward trades, trading new model with prop firms. I really prioritize 1 to 1s, 1 to 2s, and like max 1 to 3s. And by anything past a 1 to 2, I'm usually trailing my risk following price action, right? And that's just securing profit. I really don't want to give back any of the money that I'm, earning unrealized P&Ls. If I'm up $1,000, why would I let price come all the way back and hit me out break even? That is a very unprofitable move in my opinion. I always focus on securing profit. I think you should too. It's a very, very positive way to start, beating trailing risk drawdowns on prop firms and start securing money so that you're always getting money. You're always going to leave money on the table. You're never going to catch the higher the move or the lower the move. Right? So make what you make and be proud of what you make. But for step number 5, this is my trade outline. These are the only rules that I would apply to my trading. So number 1 is I'm only going to be looking to take max 2 trades a day. Typically, if I get 1 win during the first macro, I'll just stop it there so I don't look to give back the profit in the second macro. Okay, it's very hard to achieve profits in trading, so there's no need to overtrade in that one session, likely to give your profits back. If I take 1 loss, I will gun for another setup because I am taking minimum 1 to 2s per trade so that I am actually able to do that and end up break even if I do take 2 losses and I take a win the prior day. Next is news at 9:45 a.m. or 10 a.m. or both. We are not trading the first macro. We're going to be leaving that and we're going to be trading the 10:45 to 11:15 a.m. macro. Next, risk appropriately. Right? You're only going to be risking 10% of your drawdown size on prop firms. And I know that sounds wild. I know that 10% sounds like, whoa, that's a lot of money. But realistically, you do that anyway. If you're a prop firm trader now, you realistically do that. So 10% of that is obviously $250. So do that per trade. Obviously going for a 1 to 2, you're going to make 1% per trade. And over time, trust me, you're going to be extremely profitable. So do not base your risk off account size, like going for 10% of $50,000 or 1%. Don't risk 1% because the drawdown, trust me, if the drawdown's 2,500, you do not want to be risking, 1% per trade because you're not giving yourself enough trades to accept losses. All right, you're going to be forcing yourself to take wins. And lastly, copy me. So if you want to trade live with me and you want to learn more about the strategy that I was teaching here, where I go a little bit more in depth inside my course, and you can watch me do this live on my daily live streams in front of my students, and I call out all my trades and I show the executions on screen so you can copy me as well. And link is in the description. It's the first link. You can join me there. So now let's take a look at one more example. So I have another example on here. This is going to be for the 10:45 and the 11:15 a.m. macro. So what we are looking for, again, we are looking for some higher time frame context. We are seeing that price is ready to come down to this low following our recent macro timing trade, right? And we can expect price to potentially sweep this and then look to go higher. But where will it look to go higher? Well, I reckon if price was able to sweep this, we could look for a trade up until this small 15-minute imbalance right here. So that would be my higher time frame context. So I want to take trades up until this 15 minutes. So what I want to see is I want to see a sweep and a potential liquidity sweep, CISD play. All right, so I'm going to play price out. So we get the liquidity sweep, and now we just need a change in the state of delivery. So right here, we keep going down, keep going down. We don't have much yet. So we're either looking for a breaker structure or a inverse fair value gap to confirm our bias. All right, so far nothing. Okay, right here, so we get an inverse fair value gap first. Now if we can have a candle closure above this internal high as well, this could also be a nice breaker structure. So right here we get a nice breaker structure, and now we can mark out our fair value gap. So we have a 1 minute fair value gap here, and we have another higher 1 minute fair value gap right here. So depending on which one gets respected, right, that's the one I'm going to be looking for in order to take it up higher. So let's play price out. Not quite yet. All right, so right here we get the respection. Again, we're respecting the 50% level of this bullish fair value gap. There is no need to come to this one since this is a breakaway gap. We're breaking away from this area, right? But if price did come down to there, we'd be expecting something like this. But since we are able to have a nice wick on the 50% level and we are able to push away from it, we can actually take our trade round about there. We can actually see that this bearish candle actually came into the level first, which we could actually even take our entry off there. That's a very small retracement. It's very hard to notice, but again, it is something that you could actually look to take a trade on. Probably would have taken a trade on there had I seen that. And then we got 50 points stop just underneath the gap, or the middle point of this fair value gap, because we should be respecting the 50% level of this fair value gap. If we had a body closure underneath the 50% level, I'm going to anticipate that we're going to get a wick down or either a closure down before moving higher. Okay, so we respected this one. We've confirmed that theory. Now we could enter our trade and we could target that level for over a 3.46 risk to reward. So right here, we're expecting another fair value gap after breaking another structural point right there. All right, now this one body closed underneath the 50% level, hence why it wicked down so much. Then it come back up, closed outside of the range where you could have looked to add another position, and then we're able to shoot up for 173 points. And that is a simple trade right there. Over a 1 to 3 risk to reward based on a higher time frame context, liquidity sweep, a change in the state of delivery, and a simple fair value gap retracement. That is quite literally all you need to do. Now, again, you can focus on base hits, a 1 to 2 risk to reward. You would have been out before that little pullback, or you could look to either scale out your position, go break even, look to manage your trade how you would want. But depending on what you need for consistency rules, that's all you need to be doing. Waiting for confirmation, which we can see very, very narrowly did that bearish candle come into the zone, which if you had a buy limit on that fair value gap anyway, you could have been filled there, or you could enter on the closure had you seen that. If not, you can see and wait till price comes in there, and as it starts to pull out of the gap, you can look to take your entry long. All right, so that is another beautiful trade. So that is it for the video. If you learned anything from this video, drop a like, comment your thoughts about the video and what you want to see next education wise from me. Subscribe to the channel for more education, and if you want to take trades like this live with me every single day, then the link is in the description where you can join my private community.